Hey everyone, my name is Hunter Satterfield, one of the partners here at Kane Waters, as well as the Chief Investment Officer. As always, today I am joined by my fellow partner and the head of the CWA Investment Committee, Brian Bortz, and then also our partner over at Tectonic Advisors, Brad Sanders, who is the managing director over there. This is your June market update. For the month of June, the S&P 500 returned 5.1%. Interestingly, most of the return for the entire year, as the market's up about 6.2% for the year. Global stocks were up 4.5% for the month. And again, for the first 2 quarters of the year, they're now up 20% year to date. Domestic bonds up 1.5%. Global bonds up 1.9%. So today we're from our home offices as we approach the July 4th week. We've got the BBB that has passed the Senate and is awaiting House approval. We also have tariffs that may be hitting as early as July 9th, with seemingly announcements coming right and left from the Trump administration. So lots to talk about, gentlemen. Thanks for joining us today. So, Brad, come over to you. We are halfway through this year. Nothing really has happened from the Federal Reserve's policy standpoint. Everything's been sort of frozen. The Fed put is kind of on hold. Would love to come over to you. There are Fed cuts priced into the markets for the latter part of this year. Half the Fed seemingly is worried a little bit about growth. Half the Fed is seemingly worried a little bit about inflation. So I think they're all kind of scratching their head. Would love to come over to you for some thoughts on what the Federal Reserve does the second half of this year.
Yeah, I mean, I think they probably will get to what's priced into the market, which is 2 to 3 quarter 25 basis point cuts. So 75 basis points in total by year end. I think it's a pretty reasonable expectation. They're in a pretty tough spot. The Fed has always wanted to maintain their independence from outside political influence. And, what they're looking at is, unemployment, while a little bit more elevated than it was this time last year, is still in a really good range historically. And inflation, while cooling, is still a little bit elevated from what it was years ago. And you have the bogey of these tariffs sitting out there that you mentioned could kick in July 9th. We're recording this on the 2nd of July. I saw Trump tweeted there's some deal with Vietnam done, but that's just, we haven't seen any deal yet. So we'll see what that looks like. But, when the Fed's looking at that, those tariffs, if they kick in, they will be inflationary. Now, it's not going to be, a price level of everything, but depending on what tariff deals are done and which aren't, there is going to be price pressure on the upward trend in the United States. And so the Fed does not want to empty the clip ahead of a potential inflation measure. They don't want to cut and then immediately turn around and raise. That seems like a very simple mechanism to do. But every time the Fed moves interest rates either direction, there's ripple effects that cause second and tertiary and on effects throughout the economy. And those effects take 6 to 9 to 12 months to actually hit. So if you cut rates and then immediately raise them, now you have the after effects of that cut taking 9 to 12 months, and then you have the raise coming behind it, and it causes a lot of chaos. And then you have the president basically calling for Jerome Powell's head every day now. That kind of makes it worse from his seat because he doesn't want to look like he's just bending the political will. He wants to look like he's doing what the Fed's mandated to do, but he's also getting all this, intense pressure on social media and otherwise. So I would expect them to cut a little bit. It's going to be baby steps. I don't think we'll get one until the fall, and maybe another one towards the end of the year. If things stay the same as they are now, if these tariffs kick in and we start seeing upward price mobility and inflation picking up the back half of the year, we won't see a cut, and we could see a potential for rates having to go higher if that kind of gets some momentum to the upside.
Yeah, that's good. I think, again, a lot of what we talked about in committee last week and Tectonic's looking at every year, there's still just a lot of fluidity to the situation, which is obviously a common theme on these recordings throughout the year. Now, one thing that we finally look like we might have as we approach the finish line, which we've talked about for the better part of the year, is a new tax bill. And this bill obviously includes all kinds of things. It is the BBB. Brian, I'd love to come over to you. Now that this is through the Senate, we have some broad indications of what is in there, with some permanency to tax cuts and things like that. You want to talk a little bit about, sort of what our team is looking through on how the market might respond to something like the BBB?
Yeah, thanks, Hunter. The big beautiful bill, as it's entitled, is big. It's 887 pages. It's a bill. I guess beauty is going to be in the eye of the beholder. But the fact is that, like Brad just said, tariffs are looming coming July 9th, and then you have this massive piece of tax legislation. And basically, if you're trying to figure out what it means, it means about 4.5 trillion dollars in tax cuts. Ultimately, the bottom line cost is estimated to cost a net 3.3 trillion to our national debt. Now, again, those numbers are still very fluid. It has passed the Senate. I think it's going to be a big challenge in the House, but it'll probably get done. What's in this thing? Everything is in this thing, hence the name big. The state and local tax deduction limit that you have on itemized deductions, that's limited at $10,000 right now. That's going to quadruple up to 40,000. So that'll help higher taxpayers that itemize, that live in high income tax states. There's $350 billion to border and national security. There's these things called Trump savings accounts, which your planners are going to learn about as they become real. This Trump savings accounts are going to have $1,000 deposited from the U.S. Treasury to newborns. So there's a lot, Hunter. There's a lot going on in this bill. It's kind of all over the place, and it literally passed the Senate in a dead tie, 50-50, and Vice President voted for passing it, so it passed by vice presidential approval. So this thing could be anything, and so we are still learning the details. If anyone tells you they know what this is going to create and what it means, they're probably lying to you, as Brad has said on numerous times in his weekly updates. So stay tuned. You definitely want to stay tuned, much like you did about 5 years ago, to Kane Waters, and let us know what you want to know about it, and we will let you know what we find out.
Yeah, thanks. I mean, there's a lot there as we unpack things. And folks, I think the big takeaway message is the first half of this year, both domestically and internationally, has been a really positive move with a ton of volatility along the way. And we expect still tons more volatility as we head through the second part of this year and the early part of next year as the market figures itself out around BBB tariffs and Fed policy. So tons still there, but the key from our perspective is to stay invested and just keep buying, just keep investing over and over again for the long term as we look to see some growth in the overall economy. So thank you as always. We will be back in front of you at the end of July. I hope you all have a wonderful July and a wonderful summer break.